Hello, my name is Vladimir Tikhomirov, and I'll give you a short outlook for the coming week in the macro area. Last week has been very positive for global markets. There were at least 4 large events that raised optimism of investors. 2 of those were the decisions by central banks. European Central Bank decided to leave its rate unchanged, which didn't come as a surprise, but also guided for a continuation of lax monetary policy for a quite prolonged period. And the Fed also decided to leave its rate unchanged, but also guided that there will be no rate changes for the coming year at least. On top of that, there were elections in UK that boosted the support for conservatives and opened way for a structured exit of UK from European Union, which is a positive for the markets because another outcome could possibly mean the exit without a deal, which was the worst case scenario for the markets. And of course, not least was the progress made in the US-China trade talks. Basically, there were no new tariffs imposed on China starting from this week. As promised earlier, these tariffs were withdrawn, and the chances are that at the beginning of January we would see the deal signed and the process of gradual lifting of existing tariffs could begin, which is of course positive for global trade and global economy. To top that, there were some moderately positive news coming from the Normandy 4 summit a week ago. Basically, there was no big progress reached, but on the other hand, there was some significant agreements made on continuation of a peace process in the Donbas area with the new removal of troops, prisoner exchanges, and creation of conditions for lasting ceasefire in the area, which of course is positive because that reduces the risk of new escalation and exchange of fire between the sides. So all of that lifted optimism of investors on the local market, boosted demand for the rubles, especially ahead of the Russian Central Bank meeting, which ended up with the expected rate cut. But ahead of that, investors were buying Russian bonds, anticipating that prices would go up given the falling coupon as a result of cuts to the official rate. Going forward, the coming week would be more calm because basically that's the last trading week ahead of the Christmas period, which starts a week after. So we expect the activity of investors to start to come down, and on top of that, we also expect some rising demand for effects on the domestic market that could push ruble down to 63, 64 rubles to the dollar. This demand will be coming from the peak in payments on external debt, demand from importers ahead of holidays, and demand from the population, again, ahead of the New Year holidays. This traditionally happens around mid-December each year. So we expect ruble to be somewhat weaker in the coming week and the activity on the markets to start gradually coming down ahead of the holiday season. That's all on my side. Thank you.